Hello, today I'm going to talk you through the steps that are used in measuring transactions and getting them recorded in the accounting records. Step 1, use source documents to identify the accounts that are affected by the transaction. Okay, source documents, what does that mean? It could be a sales slip where you've recorded a sale of a product. It could be an invoice that's received from an outside company, something that our company needs to pay. It can be payroll records, whatever it is that tells the accountant something happened that needs to be recorded in the books. Okay. Step 2, analyze the impact of the transaction on the accounting equation. Okay, so we need to see what happened to assets, what happened to liabilities, what happened to owner's equity. Later on in this PowerPoint are a list of transactions. The first one is that the company sold stock to stockholders for cash. Okay, so that means that the company received cash, which is an asset. So assets go up, and the company issued stock to the stockholders, meaning that the stockholders' equity goes up, so that the transaction in the accounting equation makes assets go up on one side and stockholders' equity go up on the other side so that it stays in balance. Step 3, decide whether the transaction is a debit or a credit to the individual account balances. Okay, to do this, we need to know what makes an asset account go up, what makes a liability account go up. Assets go up with a debit, liabilities go up with a credit. Okay, and I'm going to have a visual of this later on. Okay, step 4, once you've determined the debits and the credit amounts, then you record that transaction in a journal. Debits equals credits. Step 5, you post that transaction to the general ledger. The general ledger is the collection of all of the accounts that the company has in their books, and it's how we accumulate all of the information that is being recorded. After the end of the time, the general ledger, we prepare a trial balance. Okay, a trial balance is a listing of all of the accounts with their ending balances in a 2-column debit credit format. It is to make sure that we have everything in balance before we prepare the financial statements. Thank you.